Let's take a look at the markets, because it seems that this week we've got a market that's under pressure, and it's a theme that continues from the kind of performance we saw all through last week.
Yeah, I mean, once all the banks have announced, once all the companies announced, and once the excitement of earnings seasons was over, it was expected that the market would start clawing back some of the gains it had made, primarily from profit taking, and as well as the fact that from a macroeconomic perspective, we still have high interest rates that are expected to impact on credit extension to the economy and general growth. So those are some of the things, some of the issues that are weighing heavily on investors' minds at the moment, and could be a reason for having a sluggish market over the next few months.
Where you talk about high interest rates, of course, we're seeing foreign interest being directed specifically to the bond market and government securities in particular. Samora, I mean, what kind of tussle is happening between the bond market and the equity space right now?
I mean, it's the same thing that was started happening from Q3 of last year, with most investors saying that, hey, we're getting 16-17%, even higher from risk-free investments, 3 months, 6 months, 1 year risk-free investments. So what's the point of putting your money in the equities market with companies that are likely to be affected from, negatively affected from the high interest rates? So that's what's been driving the market for the last 6 or so months, and this has been, of course, helped by the tight monetary stance that has been taken. However, now this year, given that overall inflation is expected to drop due to lower prices as well as higher base effects, then a lot of investors are saying that even right now, bond investments look even more attractive than they did during Q3 of last year. Especially
where you've got some disappointing numbers coming to the markets as well, Samora. I mean, we had National Bank of Kenya out with numbers yesterday, and 2011 pre-tax profit falling 9%. What did you make of those headline numbers? Because it really puts the focus on that loan book that expanded, yes, 8 billion shillings, but simultaneously saw loan loss provisions increase as well.
Yeah. With National Bank, I mean, from a top-line perspective, they did well. They grew their loan book, they grew deposits, and interest income grew by double digits. And from that perspective, the bank did well. However, increased loan loss provisioning, as well as higher tax expense due to valuation gains that were made in 2020 but were being taxed this year. And I think the effective tax rate came at around 36-37%, whereas in the previous year it averaged around 30%. So that's affected their income this year, and of course have reduced their dividend by around 33%. So that will weigh heavily on investors' minds. However, traditionally with National Bank, given their shareholding structure, where you have the NSSF as well as the government having significant stakes, that I think, in my view, will always make the bank trade at a discount compared to its peers, which have much more preferable shareholding structures.
Yeah. Having said that, Samora, we are looking at a process of where the government is looking to offload some of that stake to a strategic investor. So what are you making of that kind of scenario that's unfolding? Because we know that it plans to sell this to a strategic investor, but there are question marks of just how long this process could be and the kind of price tag that would be associated with a transaction like that.
Yeah, I mean, I think once they sell the strategic, that would be brilliant. And given, I mean, National Bank has some very strategically located branches in Nairobi, and some core advantages, especially from its branch locations. And I mean, once a strategic investor is identified and the process gains momentum, and we can solidly put a date on when that will happen, then expect to see the stock price going up significantly. However, until then I mean, the stock will obviously trade at a discount. With the privatization in Kenya, we have the same case with the sugar industry, where the strategic investors have been, the government has been looking for strategic investors, but to no avail. So until a solid process and a timetable for privatization of National Bank is implemented, then I'm still iffy on the counter. because there are a few issues that could derail that privatization, as we've seen in the sugar industry.
So that second dividend that's being paid out, and it's of course the second dividend we're seeing in 15 years, Samora, at this stage offering little incentive for the investor.
I mean, yeah, it'll offer little incentive for the investor. It's less than a 10% yield, whereas KCB was offering a pretty decent yield with the fact that an investor is buying into a solid company. So I don't think it'll do much for the stock. But going forward, there are a few factors that could work well for the company. A lot of investors are looking at the change in management. Mr. Marambi has done a brilliant job bringing the company from loss-making position and finally paying dividends for 2 years in a row.
Yeah.
But I would like to see how the replacement goes, and that could work well if they restructure their executive suite to a more aggressive, less conservative management team.